James, so perhaps if I could start by asking you, what is an investment trust?
Well, first of all, an investment trust is quite simply a pooled fund. That is to say, it's if you make an investment in an investment trust, you're investing in a range of other companies, which thereby reduces some of the risk for investors.
And who runs investment trusts?
Investment trusts are generally run by professional fund managers. Sometimes investment trusts are self-managed and have professional managers working for them, but more usually it's run by professional investment managers.
And so what's the role of the independent board of directors relative to the fund manager?
Well, as you rightly say, they are an independent board, so they're not in any way connected to the investment manager. The investment manager is responsible for managing the portfolio in accordance with the investment objective of the investment trust, but the board of directors make sure that that's happening and make sure all other aspects of the company's affairs are properly managed.
And you mentioned there the investment objective. What is that?
The investment objective is the objective which the manager is trying to achieve. So that will be an income or a capital objective or both, and it may well be specifically international, or it may be regional, or it may even be sector specific.
So it specifies the parameters essentially in which the manager can invest? Absolutely
right.
And who buys shares in investment trusts?
Well, a wide range of investors buy investment trusts. In fact, anybody can buy an investment trust. The usual buyers of investment trusts are actually professional wealth managers and private client stockbrokers, but they're also widely bought by private investors. Private investors have always been very keen supporters of investment trusts.
And why would a private investor buy an investment trust? What's the benefit, if you like?
Well, the benefit for a private investor is that they are able, as I said earlier, they're able to invest into a pooled fund, and that's a lower risk way of investing in the stock market. They have a professional manager who worries about the underlying investments, and they are able to do that quite cost effectively because the fees on investment trusts are generally very competitive.
And if I was a private investor looking to buy an investment trust, how would I go about researching an investment trust?
Well, there's a number of ways in which you can research investment trusts. Obviously, if you're an investor who has access to the internet, there are a wide range of websites that specialise in doing that. The way you need to buy shares in an investment trust is through a stockbroker or online share dealing service, and I would suggest that that's a good way of starting. If you know about particular trusts that you're interested in, then you can find out information from their own websites.
What about risk, though? You mentioned that buying through a pooled investment, it lowers the risk than buying in individual direct equities, but there are still risks to investing in investment trusts.
Indeed there are, and those risks vary according to the investment objective. So something very specific, very narrow and very illiquid type of investments like direct property or private equity are always going to have a higher risk attached to them than something much more mainstream, large capitalisation like a blue chip fund.
So in summary, what would you say the key attributes of an investment trust are?
I think the key attributes of an investment trust are the professional manager managing your investments within a pooled portfolio, and that investment being watched over and governed by an independent board of directors who are not in any way connected to the investment manager.
Thank you.